This is Stock Talk, a discussion of stocks in the news with the analysts of Zacks.com. Well, according to published reports, it looks as if Abbott Labs is turning in a pretty good performance, while other companies in its industry remain flat. Company shares have climbed 32% over the past 3 years, while healthcare stocks as a group have fallen about 15%. Here to discuss this with me now is Tracy Reinick, our value stock analyst, and Mike Vodka, who analyzes momentum stocks for us at Zacks.com. This is a very interesting situation here. The stock is not cheap. It's trading in the mid-50s as we tape this piece, and that is around 15 times expected earnings for the year versus a sector multiple of 12. What's going on here?
Well, I think investors are willing to pay for growth right now, and they are expected to have double-digit growth in 2009, which is, not unheard of, but it's pretty good given what's going out there in the economy.
They're paying a heck of a premium for growth.
They are, but they're willing to because the growth is expected to continue for the next several years. I mean, it's basically being driven by one big drug that they have, Humira, which is booming. Its sales for the fourth quarter that they just reported, 2008 fourth quarter, were up 42%, and then 2008 yearly over 2007 they were up 48% for this one drug. So and it continues to see new usages for it.
Right,
it's basically a rheumatoid arthritis drug, but it's now being used for psoriasis and Crohn's disease and a few other things that are in trials right now. So they expect the growth of that drug to continue.
So because of this drug's potential earnings
right.
power, that's why these projections are up for this company.
Yes, because, they see this growth continuing over the next couple of years, and that's more than you can say for a lot of the other big pharmaceutical companies that don't have, what would be considered a blockbuster drug in their pipeline. It doesn't go off patent until 2016. Okay. So that's a good indicator. Plus, Abbott is a little bit different than some of the other big pharmas, is that it also has a medical device division and like a products nutritional division, both of which are doing quite well right now. In fact, they just announced that they were going to buy out a smaller company that does LASIK eye surgeries and cataract devices that is number one in the LASIK eye surgeries, Advanced Medical Optics.
Well, apparently they do a pretty good business in heart stents.
They do. That's their other kind of big division, and they saw this last quarter the stents division was up, sales were up 58%. So, all of it looks good, the overall picture for all of their divisions, which is, again, more than you can say for most of the other big pharma companies.
Well, Mike, you're going to show us the momentum picture here, but I saw one published projection that the stock could rise 40% over the next 18 months as a result of well-executed and diversified strategies that they're employing.
Yeah, well, like Tracy mentioned, they have a strong product pipeline right now. And unlike many companies in general across the entire economy and specifically within their sector, Abbott's doing really well. So, investors are going to price that premium into their share price. As far as whether they will or will not rise 40%, I think the general theme is that this is a company that has done well over the last couple of years and is continuing to do well, and they look like they're going to do well moving forward. Getting back to the fundamentals a little bit, we've definitely seen that play out in their share price over the last couple of years. The first chart I'm going to show you guys is a 5-year, and really the thing you want to look at is going back to the fall of 2005. Shares are trading at about $37. Recently topped off over $61. It's traded a little bit lower, and then as you said, right now it's right around $54. On a shorter term basis, just within the last 6 months or so, and even within just this year to date, this stock's definitely outperforming the market. It's trading in the green for the year, and then in the last 6 months, it's up from $45 to $54. So that's pretty solid performance in this environment here. And getting back to what you said about multiples, it is a premium to what's happening in the industry, but it's also important to look at the multiple within the context of the overall economy. And this company, it's growing its earnings, and that's very unique right now. So investors are willing to pay up for it.
Do we happen to have a Zacks rank on the stock?
Yes, it's a number 3 right now. The estimates are down a little bit for the first quarter by about 5 cents, but the year picture looks pretty good. They recently confirmed 2009 estimates between 365 and 370, and so estimates are at about 368 right now. Our analyst also has a buy recommendation on the stock.
Yeah, Jason Apadano, who is the covering analyst for this particular company for us, rates it a buy with a price target of $65 and says that he expects growth over the next 5 years, driven by the strong Humira sales. And he believes that they possess a very low risk profile as a result of the diversified strategy that they implement.
Right.
I guess picture's looking nothing but good for them right now. We'll have to keep an eye on it and see going forward just how this plays out. Abbott Labs is what we've been talking about here on Stock Talk. ABT, the ticker symbol. With Tracy and Mike, I'm Terry Ruffalo.